Hey everyone, let's get started. I'm Dale Pinkert. Hope everyone's doing okay. Hi Carlos, Justin. How's everyone doing? Thank you very much. These are the dog days of summer and major central bank activity happening this week. So as far as having conviction about market direction in this environment, I would rather react to what the central banks do rather than try and guess, make a roulette bet, a black or red bet. We know the market is positioned and hoping for, after last week and some weak economic data, that central planners, central bankers will come to the rescue of financial markets with more easing, with more QE. Geithner is in Europe, so they're all putting their heads together to see how they could squeeze the shorts out and the dollar bulls out. And it's going to be interesting to see if what they come up with lasts for more than an hour a day. And so let's get to the markets. Starting off with the US dollar index. We're going to go through some of the pairs here and talk about some of the formations that I pay attention to. We talked about last week the dollar index possibly pushing up towards the 84 level one more time, which it did on Wednesday, Tuesday, and then Wednesday we had this two-close reversal. I was talking to the premium membership and said if we close underneath this close, which was the 83.88 level, that we would have a sell signal closed at 68 this day, and we had a pretty nice two-day drop in the dollar with risk coming off on Draghi's statement. So for now, you still have to give the benefit of the doubt that there's non-confirmation. Could there be another shot up if they're disappointed with no QE? Definitely, but just like I warned about being too bullish a dollar here and here and here, I continue to feel that way, that we're setting up some type of top for what could be a more meaningful correction. Now, we could break all the way back down to the 80 level and still be within a major bull market, holding the lows that we posted in the 78 range, going into the sell in May and go away into the May time frame where we had this big dollar rally. So massive divergence occurring on the daily. Can't rule out another shot up to 84. Last two have been rejected. This was rejected. This is our second lower RSI. I believe if it happened again, momentum would not confirm the price size. So I'm going to give at least through mid-August into the bank stress test the benefit of the doubt to the dollar continuing to weaken going into that time frame. Give me a Y if you're with me on that analysis of the dollar, and then we'll go to a couple other outside markets. Good, Carlos. How you doing? Here's your S&P chart. We're really only a stone's throw away from taking out the May highs of 1420. So it's been a grinding effort, but to me it looks like they could still squeeze the short above 1420 going into the mid to late August time frame. So I know there are a lot of people bearish equities looking for a place to short it. I think that they're most likely premature. Some of the commodity markets, again, due for some type of pullback, but still acting very strong. That's why your commodity currencies are acting the best. Canada's still very weak. To me, looks like crude could pull back in here to the 85. It will probably get some type of pop. In USD CAD, there are some divergences in USD CAD that are worth paying attention to going into the central bank meeting. What has been bothersome has been the weakness in the recovery in copper, which is important to me because copper is really a great indicator of global growth, particularly in China. So S&Ps are all the way back here and copper is lagging dramatically. Makes me think that even if S&Ps made a new high, the best we could get out of copper would be 360 to 370 zone into that type of scenario into mid-August. Whereas the precious metals and crude have been acting much better. Take a quick look at silver. Looks like it's trying to come out of here. Nice little base. Gold turned good last week, which also makes me think on the correlation that we're going to see lower U.S. dollar Swiss prices, which I correlate the gold to Swiss. Still in a range-bound market. We could get through these levels. We might start to go. Again, the key is going to be whatever the central banks do. I believe in this environment, you're much better off being flat, not even having a position into very thinly traded summer markets with major event risk coming up on Wednesday. And then after that gets out of the way, you're prepared with your technical areas and biases to act and react to it rather than trying to guess which way the markets are going to respond to whatever announcements come out of the Fed and out of Europe. Does everyone understand that sometimes the right trade is no trade? That's a position too. Who sees the market better when they're flat than when they're in? Because when you have a position, you have a stake in it. At times you talk your book, and when you're flat the market, you're more objective, correct? So this is probably a good time to stay objective and not attached to an outcome based upon central bank actions this week. Okay, that's coming from someone who's been doing this for over 3 decades. Do you at times feel afraid of missing something? And that's why you pull the trigger or click your mouse. Are you afraid of missing trades? Who has that fear? I know I do at times. It leads to impulsive trading. Don't be afraid of missing anything. There will be another trade just around the corner. So if you find yourself making a trading decision, getting into a position because you're afraid of missing it, right. That's a good indication that you don't need to be in the trade. Okay. So let's move over to our pairs now. I just want to show one more thing. We did get a very big break in the bonds last Friday. I was a little disappointed in the response of the U.S. dollar yen to it. But TLTs came off. It was a pretty dramatic decline after the GDP numbers. So we'll see. Just like the dollar, the bonds are diverging as well. This is a new price high. This was a new price high. And momentum indicators are well below the June RSI reading right here. So perhaps what Bernanke has to say can get the bonds going again. I'm hearing talk that if they do a bond buying program, it's going to be in mortgage-backed securities, try and goose the housing market in front of the elections. And there's no way that it's not a political decision. They say the Fed is supposed to be apolitical. Not recently. Okay, so we had this big break on Friday in the bonds, but U.S. dollar yen was barely able to close higher on the week. And now we're down about 25 pips on the dollar bounce today in yen. So we'll get to the pairs now. Try and cover any formations or possible scenarios going into this decision. So if we are flat and if the market rallies or sells off, we're prepared to act on it. Starting off with USD CAD, again, dollar weakness. Last major buy point was down here about par 50, and we had this rally before the dollar sell-off. But Canada, really, the dollar is making new highs, okay? If you can just visualize the dollar index chart, the dollar index was 84 here, right? And 83.80 here, actually. Dollar index made new highs, and Canada made a lower high here. And we just made new highs in the dollar index, and this is the second or third consecutive lower high in Canada. So Canada, to me, is displaying relative weakness. We could get a nice pop here if crude does come off and there's some disappointment in QE, but for now, I still think you're better off fading strength until Canada can start really proving itself on days when the dollar's strong and finally start making a higher high rather than lower highs. Not saying that there can't be a trade on the long side here, but I'm pointing out what the market has been doing despite major dollar strength. And a lot of this also has to do with the crude strength. But does everyone understand that the dollar index was lower when Canada was here back in early June, and dollar index made a new high, Canada made a lower high, and then the dollar index again made a higher high and Canada made a lower low? Give me a why if you understand how USD CAD is demonstrating weakness compared to the strength we've had in the Dixie and the US dollar index. Okay, Carlos. So last week we also talked about the EG, and this is what we use to pick out preferred longs or shorts based upon being long Euro USD or being long pound dollar. So right now it's a bit neutral, and we're still putting in what might be the second high or low. So for the benefit of the doubt, I have to still prefer the longs in Euro USD until I see something more negative in Euro pound. To me, it looks like there's another drive coming up here in pound. What's one of my favorite topping formations? Not sure if you've been around, Carlos, long enough to know what I look for. I look for 3 drive formations. Here's your first on the hourly, which was confirmed by the RSI. Here's your second, which diverged from the previous RSI reading. And so to complete, there'd be another high, another push up. And this time, I would suspect or believe that the RSI will stay under 70, and the pound may be a good short up there. So I'm looking for potential 3 drive to a top formation in pound dollar for a potential short sale. Give me a Y if you understand the formation of 3 drives and the double divergence that could take place at a marginal new high. Okay. Okay. Moving on to Euro USD. Last Monday, we were talking about the divergence that we had on the daily. Okay, and that was down here. And then we started turning up and had the Draghi statement. And we've diverged pretty good on the daily. We diverged at the bottom on the 4-hour, I believe. Yes. And on the 1-hour, near the lows. So I'd be leaning towards looking to try and buy a break here. And this too looks like we've had a 2-drive formation. There could be another push up. But based upon EG, I'd be looking to buy it. We've taken out some of the bears. For example, people that were short and had stops over this high, they're gone. But there could be, a bit more of a short squeeze to come. Or maybe they're even going to go for some of the stops above this 26 and 27 level before this is all said and done. I still think that there's a chance that this bear market rally in Euro USD has some more left in it on the upside. So I'm looking for reasons to buy a break here. An area of interest for me is going to be right around the 2140 level, another 100 pips lower. Everyone have that analysis down and what I'm thinking here in Euro USD. So because I believe the EG is still going to trend up a bit, I'd lean more towards shorting the pound at the 3rd drive and buying the euro on the pullback. Moving over to yen, this was a disappointing action. We almost had a reversal week. Last week we did, but already we're giving it up. Probably a ton of stops under the 77.5 level. I'm long, lightly long into this. Still believe that this is a important bottom that's being developed here in yen. And everyone remember last spring when we had this huge run in yen, and up here people were talking about targets like 92 and 95 in the yen. Definitely 86, 87 looked like a stone's throw away. And so people have been trying to buy breaks in the yen all the way down. Okay. So we've been selling off since March. So you have March, April, May, June, July. I think they've washed out quite a bit of the bullishness in this market, and most of the things I'm reading, most people are talking 78, 77. Very little bullishness in here compared to what we had here. Here, everyone had to own the yen. Anyone recall that last spring, how bullish public traders were and market participants and analysts were on U.S. dollar yen, that this was the beginning of a monster move? Anyone recall that in the spring? Some of the higher targets that people were talking about. You're not hearing that anymore, are you, Linda? Are you, Carlos? Okay. So based on sentiment too, I have a small long position. Yeah. So no one likes it anymore. You can't rule out a spike under this June low, but I'm still looking to try the long side in yen because I think eventually we're going to get to those targets that people were talking about in the spring. So a lot of it's going to be tied into what happens to the treasury market. Have you guys started to pay attention to TLT or the notes or the bonds if you're following the yen? Have you noticed that correlation really didn't hold water last week? Instead, the key long was euro on the dollar break. Yen did not do much. Okay, so that's my take there on yen. I continue to favor it because not many do anymore. They all loved it here. They all hate it down here. So pay attention for potential reversals in the yen, and that's what I'm doing here. Okay. Moving over to Aussie, we're starting to get some negative divergences. Last week I was talking about the potential for 106 back here was 104. So really, this has been the strength, but vulnerable now. You know, if we get a pullback in gold, we get a pullback in the commodity markets and crude, copper looking weak, China having a bad week or so, Aussie could pull back, but it's not my preferred short. I'd really like to see where Aussie is at. Should I be right about the S&Ps taking out their April high of 1420 because of the very tight correlation that we have in the Australian dollar to stock indexes? And as you can tell, markets are pretty dormant today. Aussie's a bit stronger than the Kiwi. So I'm neutral here. I think I'm a more willing buyer on weakness in Aussie than I am wanting to top pick this for a big decline, at least as of today. So just like I'm telling you guys not to take any big positions in front of all the central bank activity, it's okay to say, you know what, I don't know what's going to happen here. And when I look at my charts, I don't know what's going to happen, but I'm prepared by looking at certain areas. Say Aussie sells off, where am I a buyer? If Aussie rallies, where am I a seller? So to be prepared to react to this action rather than predicting it. And we'll wrap it up with U.S. dollar Swiss. Had a very negative week, just like Euro had a positive week. And it's my view that this is more of a short. So I'll be looking to sell strength in U.S. dollar Swiss. So far we've had the inverse look that we had in Euro, where we've had, and pound dollar, we've had two drives down here. It's a little clearer on the 1 hour. Here's your first one, here's your second one. Looking for at least a third before we get a better rally off this. But I think that you can make the case that we put in some type of significant high. And once we start getting through the 21, normally we go to the 50. And the 50 is going to be pretty important because look at how we held the 50 on the daily. This is a 50-day moving. We start getting under this 96.80 level, we could be looking at 93 in a hurry. So just to make a bigger call, I think it's possible that we have a left shoulder here and we're developing a head, and that we could trade back down to this neckline in U.S. dollar Swiss. So just to review what we've covered, big week in central banks, lean towards selling strength in USD CAD. It's been one of the weakest risk pairs out there. Compared to Swiss, it's completely underperformed. And perhaps we get a pullback to 85 in the crude. There could be a decent counter trend trade here. You know, maybe back to 101.30 is where I would take a look at selling this. Perhaps we're going to head all the way back down to these lows. Pound dollar, I'm looking for a potential third drive setup for a shorting opportunity should the RSI stay under 70. Euro, I'd be a willing buyer down here at 21.40. Here too, we could have a third drive formation, but I'm leaning towards there's a short squeeze that happens before the fall where we possibly get back and take out all the bears up here, all the buy stops here, just like we took out all the bears that were short from these levels before the new low. Yen, I still favor buying breaks here. Everyone loved U.S. dollar yen here. They hate it down here, where with treasuries making new highs, We're on the verge of putting in our second or third higher low. Yeah, possible. Euro GBP, still giving it the benefit of the doubt that perhaps we could rally back to 79 or 80. So, favor buying this on breaks. That's why I favor the long side of Euro USD over the long side of Pound USD. Aussie, I'm neutral. Think I'd be a better buyer than a seller there. And wrapping it up with Swiss, I'd be looking to sell rallies maybe right up around the 98.50 to 80 level. So that's a wrap. I want to thank everyone for their attention. Tread lightly in front of major news events. Protect your capital. Do your homework and get ready to respond to major news events coming out of Bernanke and Geithner and the Europeans. I'll be back Wednesday for premium members and then on Thursday. So by Thursday, we should know. Thank you, Adinda. Thank you, Vicky. Say hello to my friends at FX Street. Okay, Carlos. Hope I'm adding value to your experience here at FX Street. See you guys.